In this video, we're going to take a look at how to read the Australian Hedge or Short Report. This is Michael Thompson, JB Market Advisor and Economic Analyst. So before we go through that, we're just going to cover the general advice disclaimer and we can take a look at the report. Anything we do cover today is going to be for general advice, doesn't take any of your personal circumstance or consideration into account. Also, past performance is not a good, reliable indication of future performance. So once you're on the report page, you're going to see a few things. I just want to highlight how the portfolio is structured to give you an idea what it's designed to do. Now, this is a short portfolio, which is not very common in the marketplace. The whole idea behind a short portfolio is to do really two things: either to profit from the market, and for those who have already existing portfolio or you only long the market, this is a great way to hedge. We focus on individual stocks because it gives you the great diversity. So this is about accompanying an existing one, or simply if you want to take the opposite side of the market and profit from market correction. Now, as you'd imagine, it's momentum based, so it's going to work very effectively during GFCs and any market corrections. And the main component with using momentum is that it will switch to cash during a bull market. So as of this recording, 8th of August, you'll see that there's not much in the portfolio, not many positions, because of that very reason. Now, the most important component is that we build it around the portfolio level. So at some point, we have maximum positions running. We'll have 20 maximum positions. And we try to include all the major sectors: financials, real estate, so materials. So we're not concentrated in one area. Due to the fact that we're going to be shorting, we're going to be using a product which is CFD. So we're going to be using a product designed for this. That does restrict us on sort of top 200 and generally the most liquid one. So that in mind, let's go through and have a look at how to read the report, whether you're placing your own order or whether you're having the order placed through our desk. Now, there's a few things I want to highlight. So the first part is you'll see known as download the order sheet. So this will calculate your positions if you're doing it yourself, or if you're having it placed. This will be something that needs to be sent back to us. We'll go through that shortly after. And let's take a look at actually how the new orders are structured and how to read the report. So this first half here, you're going to see that we highlight a few things. We use only market orders, so it's easy to apply. Being a weekly strategy, you just need to place the order before the market opens. So here, just go through the column, you've got the symbol, which is MPL, Medibank Private, and you have the sector it belongs to, which is financials. The closing price as of Friday, that's used to calculate our entry, our position size, and we're buying it, we're selling, at market. With the company stop loss at $3.65. Now, with that information, some people like to look at the charts, which is a good thing to see what the trend's been like. This is an algorithm designed to detect when the turning points occur on each individual stocks. And if you click on MPL, which is down below, it will then show you the chart as to see what it's like over the last several months or half a year or so. So let's click on it, open up a new chart. And it's going to load up a new window and give you the chart for MPL, Medibank Private. Now you can see as of the 9th, this is the week ending the 9th of August, the price action, which is the weekly prices for the week. So it's closed lower, and you can see the corresponding weeks before that up into towards the end of 2018 has been trending up, and then we had a big sell-off that occurred just this last week. Now, we use a market order, so you can see the last close, which was $3.41, and you can see where the stop loss is there at $3.65. Now, once you place the order, we have many ways to manage our exit, which is to manage our risk and also to take profits. I'll run them through shortly and look at the open positions. So there's 4 ways that we manage our exits. So that being said, so let's go take a look at actually how to manage our position once we're in a short trade. So here's the open positions window table. You can see the information, daily information extra added is the date we've entered. This corresponds to the Friday of that week. The direction is obviously short, our price that we entered at, and our stop loss, our initial stop loss. Now, the comment section will just highlight if there's any action to be taken. Once you place your order with your stop loss, there's really not much to do, meaning that we need conditions to be met, which we'll go through shortly. So if we have a look at LLC, we're going to open the chart, which is down below here. We can then open the chart and take a look at what LLC, which is Lend-Lease. So every week we'll then monitor the short positions, LLC, in any one in the table. And we have 4 ways to exit. Now we're just going to highlight them that corresponds to the chart. So you have the initial stop loss here, which is at 15.65. That's the initial order we placed that's in the market, which means if it hits that level, for whatever reason, Lend-Lease goes against the position, it kept on rising. Now you can see that will be automatically triggered, meaning automatically be executed. You don't need to do anything with that order. However, we layer on top of that for our protecting our profits and also to lock in profits or protect our risk. We run a trailing stop, which is that red step line. Now, like our long position, this one adjusts according to market, and what it does is that if the price is closed above, which means anytime we have the bar here closing above that red line, it will initiate an exit. So you'll get that in the comment section saying prices closed above trailing, exit at market. So that's the important part. That's going to be the majority of our exits for our short positions. However, on the other side of it, if it goes in our favor, we also have a way to protect our profits. So this green line here is our profit band, as you would have seen in our long positions. And the minute we close below, it means prices are reached their critical levels where it's likely to rebound. Managing short positions is quite challenging. Without a profit target, it's very difficult to extract profits because the markets generally rise over time, except for obviously during a correction and a bear market. So whenever we have prices closing down below this, we would exit at the market, which will have a comment section. So that's a secondary, third exit, So you've got the stop loss, which is here. You have the trailing stop, which is that line there. And you obviously have the profit target, which is there. So that's the different ways that we exit. So you've got initial stop loss, which is rare that it does get hit. It's usually less than 5% of the time. So out of every 100 positions we run, or 100 trades, you're going to find that 5 out of the 100 will hit that level. More often than not, it'll be the trailing stop, or it'll be the actual profit target level. So that's the actual exit. So once we enter the position, we monitor it and we update the chart and update the table. All you need to do is simply come and look at the table and chart once a week. If there's an action to be done, you will see that update. And finally, the last indicator we use to exit is a reversal. You would have seen it through the ETF and the long. It's exactly the same logic. Now, the difference with this reversal is that if we come down and close below that red line, it means we're at a very extreme level. So we have 2 profit target areas. So if we actually come down below this level, we will be taking an exit. So that's the last criteria. So we have the initial stop loss, we have the trailing stop, we have the profit band, and we have a reversal indicator here. So if any of those 4 conditions are met, you will be notified. The stop loss is the only one that is exit in the market, so that you don't need to action. The one that we monitor are the 3. And when those conditions are met, you'll be notified in the table, and the orders will be sent to get out of the market. So this wraps up this video for the tutorial for the Australian Hedge Report. As mentioned earlier, it's really designed to accompany an existing portfolio. Do add those into your portfolio, because if the market is trending higher, which it has been the last 10 years since the GFC, this strategy portfolio will go into cash. So whenever the market turns over, like an insurance policy as such, you need to have it in place so that you are putting in these positions to protect the existing portfolio. If the minimum you have is if you're long an investment and you don't have anything in place, this would be ideal to consider putting into that portfolio. Anyway, if you have any further questions, you have our email and contact, and I'll see you in the next video.